There we go. Good morning, everybody. It's Tuesday, the 18th of October, and I'm going to do a brief ETF review of the major SPYDR ETFs from a cloud chart trading perspective, and just to give you an idea as to what I find interesting right now, interesting in the market in terms of Ichimoku clouds. Okay. Now, first off, we're going to look at the S&P 500 index, the SPYDR, which is ETF replicating the S&P 500 index. We can see here we are at a critical support area at the bottom end of the cloud. These support zones correspond very well with the top highs of the breakout area there. So you can see where the market broke out here above the 212 area, broke out, had a nice rally, and now busy with a consolidation or pullback. So we've had the breakout, and it's come all the way back to retest this previous resistance area to see how good it is for support. Okay. So we are at where we really want to be in terms of October. We want to be at the bottom end of the cloud. We want to be at a support area. So we're close to this 211, 212, and 209 support area. So depending on what happens in the next 2 weeks until the end of the month, I would be looking at taking a long position at some point when it finds support around these cloud chart levels. And then the rally is from the bottom end of the cloud back up to the bottom end of the top end of the cloud, which is cloud span A and B, and that's the key resistance area. So yes, the S&P or the SPYDR of the S&P is interesting on a daily cloud chart because it's close to key support levels. So watch those levels over the coming week. If we cross-check with the weekly Ichimoku cloud, we can see here the top end of the cloud here is a key resistance zone that is now being tested to see how strong it is for support. Okay, so if we have a very bad earnings season, we might dip back into this support zone or sideways moving zone, and this old cloud chart resistance can come back in as a key support area. Okay, so just keep an eye on that. But from a daily SPYDR perspective, the S&P is close to support, and that would make a nice entry point for a year-end rally back up to the bottom end of the cloud, or the top end of the 217. Okay. So if we now go back and we start in terms of this individual sector, financial services here is grinding into the cloud. The bottom end of the cloud here is a key support area. It's already tested that area. We can expect that this week. The other zones is the other support zones that it can test. So watch out to see if support comes back in here at the bottom end of the cloud for financial services ETF, the XLFS ETF, and that would be interesting at that point. Okay, materials in trouble. We broke through the cloud chart support area. We're now trading below the cloud. It's rebounding from old cloud chart support areas here. So we could see a rebound here for the year-end rally. Let's say it rebounds here. You see these candlesticks come in here, and then we can see it go all the way. Okay. So there we go. This is the old cloud chart support levels of May, which is a significant level. So we're getting close to a buy zone within a weekly cloud chart as well. So be aware of that. Okay. But so far, so good. From a weekly cloud chart perspective, we are drifting down to old cloud chart support areas. But do remember, from a daily cloud chart perspective, we are rolling over. We're close to support, so we could see a rebound as soon as you see the price action indicate that in terms of the candles, etc. Okay. Next one, we're going to look at the that's the leverage ETF. That's the other leverage one. Real estate in big trouble. Yeah, it's been below the cloud now for quite some time. We could see this type price action taking place from this support area, rebound back up to the bottom end of the cloud. So that's the short-term trading opportunity for a retracement of the sell-off. But overall, not a very nice picture. It's rolling over. There's more downside risk down to the bottom end of the cloud here for support. Let's cross-check what the weekly cloud is telling us. Yes, we're getting closer to the cloud support areas, which is at 29.95, and then again at 31.07. So it would be interesting at a 31.07 price range. Okay. So where do we? 31.07. So back down here. So we'll take a position there to trade it back up to the bottom end of the cloud. Okay. Consumer discretionary, right there, testing support at the bottom end of the cloud, absolutely at a critical level. Could see a rebound up to the bottom end of the cloud here, but that's an absolutely critical area. It's testing for that cloud support there. It's broken, it's lost it, did rebound there, so critical to see if it's going to rebound from that area. But all in all, watch out. This week will be critical to see if we're going to get back up there. Downside risk is back down to 76.70, which is the top end of the cloud. So there is still 1 or 2 down days, but if it dips back down to the top end of the weekly cloud and you've got like price action like that over here, then I would say you can go long for the year-end rally. But we're all setting up for that year-end rally to see what's going to happen. Consumer staples, testing support at the top end of the cloud. The overall long-term trend is still up on a weekly cloud chart, so watch that level, 52.12. What's it like on a daily basis? 52.12. So we are getting back down to May, June support areas. So yes, we could see this area being tested and then a rebound back up to the cloud chart resistance area more towards the end of the year. So there's a good 2-3 weeks of upside in it, back up to about 53.54 or 54.32, but then you need to see price action support, lower, higher highs and higher lows coming in here. But this area, 51.69, 51.70, major support area. So you can nibble at it at this area going back into the year-end rally. Energy, looking for support on the daily cloud. You can see these nice little cloud rebounds of fantastic entry points. Ideally, we don't want to get in at this support area. But from a short-term trading perspective, keep an eye on it, how it's going to react and respond at the top end of the cloud there. What's very encouraging here is that we are above the cloud on a weekly basis, so we have an uptrend in place on a weekly basis as well. So yes, looking interesting from a cloud chart perspective, looking interesting from daily and weekly, and you just need to time your entry point here. It's getting very close to buying zone here. Next couple of days critical, but I would like to get in at 68.50, 68.70. That is a key entry point. Okay. Financial, still stuck with its head in the clouds, not particularly strong. Downside risk is towards the bottom, the top end of the cloud. Yeah, that is the first level to watch, and that would be the second level to watch. Okay, so be aware, watch those areas pretty closely from a cloud chart perspective. So those are the zones we'd like to take positions for the year-end rally. There's still some opportunities short this, but wouldn't bet on it in the current market. We're getting close to what we normally have seasonal strength in the market. Okay. Healthcare in trouble here. Lost support at the bottom end of the cloud, collapse further down. Where's the support coming from? We can see this cluster of cloud support here. Significant support area back in June. We're going to retest that July low. We're going to retest that. And where do we see weekly? Fantastic. Watch out for this level. It's a very significant weekly support area. Okay, so what we might see is a dip back down to here at the 67, 68 zone, and then that would be a nice entry point for the year-end rally. The industrials still looking strong, consolidating the move after the breakout. You see the breakout and then the retracement. Daily, getting close to the bottom end of the cloud for support, double bottom formation here. So we might see that double bottom formation for the year end. But I would be interested in this particular stock at this 56, 57 area, bottom end of the cloud. Yeah, that's a give and take a nice entry point. Yeah. However, the front end of the cloud is indicating more downside to come. So the short-term trading opportunity is support back. You find support at the bottom end of the cloud. We then trade the rebound back up to the bottom end of the upper end of the cloud. Okay. So technology, looking for support at the top end of the cloud, could see weakness back into within the cloud here at 4681. What's it looking like on a weekly basis? Yes, ripe for consolidation. Broke out of a very nice trading range. Now you're busy with that consolidation, so we could see it come back and rebound over there. So put a 50-day moving average in there and see where that takes you. But this price here, that line there is a 9 and 26 period moving average. Okay, so watch out for that. We can see a rebound here, but there's downside risk down back to 46, this area, and this is a key area to watch within the cloud. So the bottom end of the cloud, I would say, if you look at that low there, you can see there is possibility for it to get back to that area. Okay. Right, and then the next sector to look at is utilities. A little bit in trouble below the cloud. Cloud indicate downtrend. Rebound possibility back to the bottom end of the cloud. The trend is down. The overall trend is down. We're closer to support than resistance, so you could look at a swing trade from the rebound from the top end of the cloud, back up to that resistance zone at the top end of the cloud there. So there's a good couple of dollars rebound potential in utilities. Okay. Right, and for those of you that like slightly more leveraged, the Ultra Pro leveraged, I think it's twice leveraged. UPRO is 2 times leveraged, the S&P, or 3 times. UPRO is 3 times leveraged. Okay, so there you go. Nice little finding support at the bottom end of the cloud there. This would be an extreme support level. Old highs is the new support zone right at the bottom of the cloud, and that would be a nice entry point for the year-end rally. So it could rebound, break past here, and then test this one, this 66 area. It's a difficult one. You'll have to buy it within the zone. So obviously you're assuming a fair bit of volatility in a 3 times leveraged ETF, and then a rebound back up to the bottom end of the cloud. Okay. And then the 2 times leveraged ETF is the ProShares Ultra S&P 500, and that's just the SSO. You can see the ticker on the top here. Also a similar situation, looking for support at the bottom end of the cloud. Okay, so what do we have here in terms of the S&P? Just to recap, we're closer to support. We're looking for a rebound from the cloud chart support area. So 211 or 209, this is a key zone. So I'll be looking at an entry point for the year end around this buying zone. Yeah, between 211 and 209 going forward, and then a nice little rebound towards the end of the year back up to 216, and then 217 would be the upside targets for the market there. All right, I hope this is useful, and thank you for your time and attention. All the best, and have a happy week, happy trading.